There's a new fear that has everyone spooked in the market: the decline of the US dollar. The US dollar is down more than 10% to start the year. That's the worst first half of a year in decades. But maybe, just maybe, this isn't as bearish as everyone wants you to believe though. One macro strategist on X, known as Endgame Macro, they write, "This chart may appear to signal a breakdown in the dollar, but in reality, it may be the staging ground for one of the most violent reversals in recent history." What makes this moment unique is the timing. The Fed is on the cusp of rate cuts. While conventional wisdom sees easing as dollar negative, the structure of global finance often flips that logic. When the Fed cuts into a disinflationary or risk-off backdrop, capital floods into the deepest collateral pools, and that still means US dollars and US treasuries. The rate cut becomes the trigger for a flight to dollar safety, not a flight from it. Powell holding the line on rate cuts may be less about the domestic economy and more about setting the stage for a strategic snapback, one that reasserts dollar dominance precisely when the rest of the world thinks it's fading. The important question is whether this view is correct or not. No one knows for sure, but it doesn't seem crazy to be optimistic or bullish right now when it seems like everyone else is fearful. So stock allocations are exploding higher for American households. The stock market continues to push higher and higher as it outperforms other regions, and the US dollar, which everyone thinks will continue weakening forever, may be ready to reverse course and remind the world why US dollars are the global reserve currency.